We're looking at the spread monster in this video. Now, to get the spread monster, you could go to Wave 1 Daily. It's a very common pattern to use Wave 1 Daily. Right click and go to spread monster. You're gonna see this little graphic show up, some information. This is an overview of the spread monster. There are 4 key things that you could use from the spread monster. There's more, but this is an overview today. Number 1 is the forward-looking volatility graph. You see here, this volatility graph gives us different pieces of information, which we will dive into in a future video. But the last price and this white dashed line, which is called an apex, if the green is above, we have leaning bullish. If it's below, leaning bearish. You have this yellow line, which shows us that as we visualize the range forward looking, one aggregation daily time frame, meaning forward looking 1 day. We're looking forward 1 day. These yellow lines help us to see the range, the likely range for the day. This is not some normal measurement tool that you could find on just the internet. This is forward looking. In fact, if you look at my charts, these levels hit extremely well, and you could just access it through the spread monster. So the top and yellow line, over 90% of sessions hit at least one of these yellow lines. Over 90% of sessions hit at least one of these yellow lines. So if you're on the right side, you can 90% probability target that. Be done for the day. Now, of course, market you don't always catch bottoms or catch points where it's just going to continue. But when you look at the daily forward looking 1 day, this is going to be the range. You can do this for multiple aggregations, multiple days to get weekly outlooks. But then this wall long is if we go beyond the long median, there's a 25% chance of reaching the wall long. And then less than 25% to go beyond. Yeah, 6.25 percent odds. So it helps you to see. You could use that information very, very good for targeting. And many times actually reversals happen off of this, but that's not a rule of thumb. So very cool. That's the forward-looking volatility graph. There's the forward-looking density graph, which helps you to visualize path of price in different scenarios where tops and bottoms can be according to the last 200 days Wave 1 Daily. So if price opens up, let's see, 561 because of overnight session, if you follow this line, it's visualizing path of price. And you can use that to your advantage. Where there's a lot of lines stacked, meaning that's a common scenario that the fractal has detected across multiple, from the last 200 days, Wave 1 Daily, the fractal has detected that this is wherever there's a lot of lines, that's a common path of price. So this is a tool that requires much study, but these bands as well, in the areas where it's darkest, is where price tends to stay most. As the bands lighten up, price has not, in terms of path of price to scenarios forward looking, price, the lighter it is, the less price would travel in that area. So you also get the other information here from the volatility graph in this one, and then you can look at the odds graph. This green line and this red line. You could use the intersection called RG intercept in many, a lot of people talk about this from time to time. This intercept, or where the intersect above is more bullish, below is more bearish. So very helpful. It doesn't always line up with last price, but you could use it and then normal price range according to the odds. So you visualize the odds a little bit different here than you do forward-looking volatility graph and the density graph. So this is a very deep dive tool. Those are the three components, and the fourth is the statistics sheet, or there's the statistics area. There's ways of reading this that we'll dive into in future videos. You could sort it by count, win rate of different levels getting hit, which is where I get a lot of high day, low day probabilities for my chart. You could change from HL, meaning high-low matching, or weekday matching, meaning it's getting data sets based off of the weekday, or data sets based off of the HL values of those candles. In particular, this is wave 1 daily, 200 days to load. But you can load options data in here too for different days. This is where the Ivy Wall strategy comes into play. Super powerful stuff. So I hope this helps as an overview of the spread monster. We'll definitely get into deep dives of it, and enjoy. It's a very powerful tool.